All right. Welcome to Traders Talk, and let's get started. Okay, we'll just wait for some minutes uh, before we start our show. Okay, for those who are first time here, I'm Meng Hon, and I'm your host for Traders Talk, and this is the show where you will learn how to trade the stock market. Yeah, so if you are a person who wants to start to learn how to trade, if you are a person who have already started to trade and want to become better, or even if you are a seasoned trader, this is a show for you. Yeah. So we'll cover some topics today. Of course, the first thing we'll start is to talk about the market, and then we will actually move to something a bit more exciting today, yeah, which is basically about what we should do and basically what has actually happened over the past week and how should we plan our trades going forward for this week and next week, yeah. All right, so great. For those who have came on board, welcome to Traders Talk, and please don't forget to share and like so that more people will actually be able to see this. Okay, so today we'll talk about the green light, right? I mean, basically, if you look at the market, what has happened over the last week is very bad, very bad red days. Red days because of the Omicron virus, right? Omicron virus. The market was a bit scared, and a lot of sell-off happened in the past week. Yeah, and of course, something different yesterday. The market has actually all turned green. Yeah, just within a short span of a week. Just within a short span of a week. That's why, like I said earlier, when things are bad, it can become very bad. Yeah, and when things are good, it can actually turn good very fast. So whether it is actually all green day going forward, it all of course depends on certain factors, which I will also mention or discuss today. Yeah. Okay, so this is actually the S&P 500, right? This is actually the weekly chart, lah. Yeah. So if you just see over the past year, I think it is over a year, right? So there has actually been many dips, and of course, each of the dip, I would say, the range is on average about 5%, 5% retracement. The same for the current one, which is also around 5%. Yeah, of course, we thought if the Omicron virus become a deadly virus, which of course up till now, the information which came out is of course it might not be as deadly as they thought, even though it is actually having 30 mutations, right? So the information, of course, from the scientists and all these people say that okay, it might be a bit easier to contagious, like I mean contagious to spread, but of course it is not as harmful as they thought, as compared to the Delta variant. So there's no official information on this yet. It is all still based on what the people monitor so far. No medical confirmation from WHO or any of the former organizations. But of course, the market actually take this quite positively. And because of that, yesterday itself, you can actually see that all the major markets, S&P, Nasdaq, the Dow, the Russel, all of the markets actually rallied yesterday. Yeah. So this is the S&P, and of course, if you look at the Nasdaq, also went up about 130 points yesterday. Yeah, and of course, if you look at the futures, I mean, market has not opened yet. So on the futures side, the S&P futures is now plus 59 points. Yeah, plus 59 points. Nasdaq futures is even much higher. See? Nasdaq future is plus 270 over points. Yeah, so that is actually a really positive sentiment on the market lah. Even on the Hang Seng Index, right? This morning I think it closed about. Let me check. Hang Seng Index actually was up about 2.7%. Yeah, so about 600 over points. So for a long time, I mean, Hang Seng is like a sleeping dragon, right? it is still going down, going down, going down. And of course, today itself, it has actually shot up by more than 2%, which is something which we did not see for quite some time. Yeah, and of course, the China stocks yesterday also, you see that the so-called worst performing China stock, right? The Baba, right? Yeah. So Baba also started to awaken. Yeah. And yesterday itself, Baba went up by more than 10 points. Yeah. Again, something which we have not seen for a long time. And for those who have been holding on to Baba, it is a great sight to see a green day. Yeah, a green day. Yeah, and of course, for those who have not entered into any of these positions, of course, this is also an opportunity. If it actually turns from retracement turns up, right? Then this is actually also a good opportunity for you to add on to many of the positions which has actually came down in price. Yeah. Okay. Let me see this. Okay. Yeah. So again, where are we now? Are we good to go? Are we good to go? That means are we good to enter the market? And what should we do? Yeah. And these are some of the things which has actually um, uh, caused the market earlier to be a bit rocky lah. Yeah, a bit rocky. Of course, the biggest one earliest was actually the Omicron virus, right? And that actually led to a lot of sell-off of the travel stocks, and then last week we actually spoke about that, right? We spoke about the travel stocks. We spoke about the vaccine stocks, yeah, like Pfizer, BioNTech, Moderna, and Johnson and Johnson. And of course, in less than a week, we have to actually go the other way already. Yeah. Remember last week I was actually talking about these stocks, right? Okay, on Pfizer, Moderna, BioNTech, and Johnson and Johnson. Uh, Last week, all these stocks were actually going up, and of course, what I said was based on the trends, right? Based on the price trends, we instead of trading the price up, instead of trading the price up, wait for the reversal for it to actually come down. Yeah, the same like what has happened during July when the Delta virus came, right? All these vaccine stocks, right? Vaccine stocks has actually gone up, and of course, after a while, it has actually came down once people are how to say, they know what to do. I mean, with the to handle the Delta virus and all. So again, Omicron would not be anything different. At the end of the day, however bad it is, the scientists or the doctors will need to actually find a solution. Otherwise, all of us will die. Agree? Yeah. So all of us will cannot die lah. I mean, either they create a new vaccine, or they ask us to take booster jabs, or they find some way to actually counter this Omicron virus. So as the results, basically the thing came in faster than we thought. I mean, basically the positive news came in faster than we thought, only within a week. So the same time, like last time was also a week. Now it's also a week. It was also a week. It started, I think, the previous Friday, right? Previous, not last week, but the previous Friday after the Thanksgiving holiday, right? Then it came a full week of up and down more than the up. And now it is actually turning. Yesterday, Pfizer came down about 5%. Moderna came down about 13%. Yeah. BioNTech came down about 18%. The only positive one was Johnson and Johnson, because Johnson and Johnson, as I said earlier, right, it is actually having also the consumer business, right, and even when all these other vaccine stocks were going up last week, Johnson and Johnson was also not moving much. Yeah, in fact, it was actually coming down. Yeah, so now with the turn, of course, that would be good for the consumer business of Johnson and Johnson. As a result, I think yesterday it also went up about $3 $3. Yeah, which is about 3% yeah, so Johnson and Johnson. And on the travel stocks, of course, all the travel stocks went up yeah. Delta Airlines went up 6%. Disney went up 2.8%. Hilton also went up slightly. Marriott also went up. Yeah. So those which actually came down went up. Those which actually went up come down. Yeah. And of course, on top of this, all the other stocks, right? All the other stocks has also gone up. I mean, whichever came down, I mean, things like Facebook. What else came down? A lot. I mean, most of it are Microsoft, Amazon, Google. All were coming down last week, right? And of course, yesterday all of it were green. And in fact, if you look at the pre-market prices today, right? Let me just show you how many greens and how positive the market is. Of course, this is pre-market, and when market opens, anything can happen. But just to be happy about it, lah. Yeah. So you can see here, JD pre-market up $4. Yesterday it went down to 70. And then SE went pre-market up $9. Twitter up $1. Mastercard up $4. Then what else? Campbell up 24 cents. Let's see. Baba up $6. Yesterday 10, now 6, right? And then Boeing up $3. Coca-Cola up 16 cents. Nike up $1. 3M up 160. Visa up 220. Google up $43. Yum up $2. Qualcomm up $3. Apple up $2. Caterpillar up $3. I mean, I can go on lah. It's all green lah. Okay, it's all green. I hardly see any of the stocks in red today. Maybe Pfizer. Let's check Pfizer. Okay. Pfizer is only up 17 cents lah. Yeah. Moderna yesterday went down a lot lah. So today recovery time lah. Yeah. So that is actually how the market position is. And of course, for those people who have actually I mean, when the market is down, I think if you're comfortable with the certain valuation of the stocks, right, then of course, if you're doing a long-term investments, then you can already enter partial position. Just buy on the dip some first. Yeah, of course, if it is more confirmed, then of course you would have probably missed it, or you can buy it at a higher price if you still want. And of course, if it continue to come down, then you can put in additional positions if you are confident of the rebounds. Yeah, of course. What happened? Of course, if you are doing on strong stocks, right? It is actually okay to just buy when there is actually retracement to certain support levels lah. So it's actually okay. But of course, if you are trading, then of course you need to actually apply a different kind of strategy, just in case when you actually go in, say, a bullish trade, right? It does not go immediately. It may continue to go down a while. Then, of course, it will cause your trade to become negative quite quick. Yeah. So again, as traders, we also look at what kind of positions which we want to do to actually take opportunity. And of course, for me personally, of course, because earlier some of the positions which how to say in ICU, yeah, that means I need to actually heal some of my positions because of the market market drop, right? So there were actually a lot of repairs and which I have actually done on the trades to roll my trades to extend the time to allow the counters to actually heal. Yeah. I mean, cut position wise, of course. I mean, the trades mostly are actually entered on strong stocks. Then healing is okay for me. I mean, of course, if you can see temporary, there is actually a drawdown on the, that means loss. You actually take some loss. And of course, like yesterday, we see the portfolio actually went back up by quite a lot. Yeah, and of course, if today the position is still green on the market, then the recovery will be actually quite fast. The same situation actually happened in my portfolio somewhere in the September decline, right? Where the drawdown, that means the losses was actually quite bad during the September drawdown. But of course, once the September October retracement was over, right, a lot of the positions also went back up. So the situation is again the same. So it really tests the market, really tests your mental. I mean, yeah, again, trading is a lot more on mental, right? And of course, for those people who don't have that strong mental, right, they would probably have already cut the position, only seeing after a week a lot of the things actually went back up, recovered, basically recovered. Hopefully it will continue for the next week all the way up till year end, and in for the Santa Claus rally, right? Like everybody wanted. Okay, yeah. So I actually wanted to cover today, right? What is this? Today I actually wanted to cover under $100 cheap eats. Okay, what is this under $100 cheap eats? And of course, a lot of stocks are very expensive. And of course, during uncertain time, if we actually go into trades of stocks, expensive stocks, let's say, for example, you go into Microsoft or Facebook's and all these kind of things, right? Which is $200, $300 or $400, right? If you do any, say, called directional trades, and if it don't go your way, yeah, then of course the losses which will be actually quite painful, yeah. If you do that, then of course if you actually still want to profit from this so-called reversal, which not certain yet, it's not certain yet. I mean, the next thing somebody will come and say that actually Omicron is very deadly, the market will again drop down. Yeah. So of course, based on such kind of situation, if you are still 50-50, you can actually do some trades on these cheap eats stocks which are below $100. And how do you actually trade them? Yeah. And again, of course, if you had positions, say, like for example, what positions was hit very bad, say PayPal lah. If you were in PayPal and then it actually dropped from $260 to now, I don't know, also $100 over dollars, right? $170 or $180. Yeah. So of course, if you are in that kind of positions, and if you say you bought a call, or even a call, say you bought a call, that would actually be quite painful. Yeah. And imagine if you were holding the call all the way from a long-term call, yeah. If you're holding all the way 6 months ago or 1 year ago, and you're holding it 1 year, and you were thinking next year 3 more months you actually roll it, right? Roll it, or actually exit the trade, right? Only to see it going up to $260 or $60, coming down back to about $160, $170. Painful. Very painful. Yeah. So of course, if you have that kind of feeling, some of the traders they actually feel scared to actually enter trades. Yeah. I mean, same like me when I actually first started to trade, right? After a very painful trade, that means you lose money. After you lose money, then you tend to be afraid to actually pull the trigger. Pull the trigger means to enter new trades. Yeah. So for those who have this kind of situation, of course, if you don't pull the trigger, you would miss the opportunities, right? Yeah. So to give you more confidence, start on this cheap eats first, lah. Yeah. Until the so-called rally is more positive, right? You can always go in again to actually do on other stocks, which is actually higher price. But at least this kind of cheap eats will give you some small profits, and even if you lose, the losses won't be high. Yeah. So I will actually cover some of these stocks: Yum China, Twitter, Dow, XLF, and one internet counter, which is actually big commerce. Yeah. The more expensive one like Shopify and all, too expensive lah. Yeah, shop. We will take the cheap one lah. Yeah, cheap one. Yeah. Okay. Let me pull up the trade station. So far everything great. I mean, how did y'all feel last week? I mean, if you can actually put on the comments how you felt last week, that would be something the listeners can relate lah. Whether last week was very panicky, what is that, sell off for you, or you are just waiting to enter. What was your feeling last week when the market was actually coming down? And are you looking forward to this week? Are you looking forward to this week? Okay. So this is actually the trade station, right? If you actually can see, right? Okay. So for some stocks, okay. So what we are going to do is, of course, cheap trades. I mean, basically, when you are bullish, right? When you are bullish, basically, you are directional. Okay, that means you actually want to buy, how to say, buy the market or the stocks to actually go up, right? So to be directional, you can actually do two types of trades. One is, of course, buying options, and of course the other one you can also do on selling options. Yeah. So of course, the immediate benefit, if the price goes up, then of course that would be buying options would be a better kind of trade to actually take the immediate upside. You don't need to actually wait so long. When the price goes up, your option value would actually go up. So we will do today some directional trades, and what this is basically very simple and very cheap lah, because I'm doing cheap eats, man. Okay, so it is actually by doing spreads. Okay, what are spreads? Spreads are actually very simple. Normally people will actually buy just a single call, right? Single call. And when they do a single call, means that, let me just put here, Yum China. Let me see. Okay, if you look at Yum China is actually KFC, right? KFC, and this business is basically in China, right? In China. So of course, Yum China price has actually gone down by quite a lot. Now it's actually trading at about 50.86. Of course, yesterday Yum China also went up by, I think, over $1 plus. You can see this long green candle here, right? Yeah. But of course, I would say that there is still a lot of upside here. I mean, up to $60, which was the previous high here. And of course, Yum China, the stocks actually started to drop since its previous earnings, where it says it starts to be affected by COVID and all these kind of things. Yeah, and it continued to drop. And last week, Omicron and all came, it continued to drop. And yesterday itself, you can see that there's actually a big green bar. Again, I mean, some people also think that, how to say, the sell down of this Yum China is associated to China, because it's China, man. Yeah, all the China stocks actually came down, right? So again, I would say some people don't know what this company is. They see China means that they sell. Yeah. But of course, China stocks yesterday actually went up by a lot. I mean, Baidu went up. I think Baba, of course, went up. SE, I think, also went up. A lot of them went up. Only JD went down yesterday. Yeah. Because JD was going up when all the others were going down, right? So yesterday it was actually all totally opposite. Okay, so again, what kind of trades which we do is this on Yum China is what we call a spread, right? And how we structure spread is actually very simple. Yeah, of course, for those who know, can just follow, and of course, for the benefit of those who do not know, right? Then just watch what I do. Yeah. And firstly, of course, when we do a spread, right, we actually need to buy a call, right? Buy a call, and current price is actually at 50.86, right? Yeah. So you can actually buy a call which is close to this price, lah. And if I look at this, what is that? This option chain, right? It is actually between 50 and 52.50 lah. Yeah. Of course, if you buy at 50, then it will be actually more expensive. You actually need to pay 310 to buy the call. If you do at 52.50, it's a bit cheaper lah. But I think 50 is still okay lah. I mean, if you can actually do at 50, right? I mean, this is just to. I mean, this is not a trade that I will enter immediately. Of course, I will look at the market open. What is the price? I would probably presume Yum China would go up lah. I mean, if it go up a lot, I also won't chase it. And this is also just for education to just train you how to actually do similar kind of trades. Not any recommendation from myself. Yeah. So of course, if you do a call at 50, right? Then of course, normally what I will see is the period lah. The period is important. I mean, for how long do you actually think that the price will actually reach your so-called target? And I will teach you how to actually do a target. Okay, I would say we shall do a spread, right? I would actually take at least 45 to 60 days lah. Yeah, I won't do any shorter trades. And Yum China is actually only on monthly options. So 45 days is okay for me. And for the price, right, this figure here, right, is actually what they call an expected move. That means from up to 21st January, Yum China price is expected to move by $4 plus minus, go up or go down. Yeah. So I look at this as an indicator, lah. Yeah, where I actually want to put my target price. So 50 is the call I buy close to the current current market price. And then the target was actually +4, right? So basically, I would actually just sell a call to actually turn it into a spread. That means initially, I would actually need to pay $3.10, right, to buy this call. But of course, if I buy this call at 310, the benefit for me is that if Yum China goes to $100 or $200, then the profits will be quite a lot and unlimited. I can go all the way up. But of course, you guys know that stock price don't double or triple overnight. So again, there is actually no point for you to actually just pay 310 when you do not actually expect the price to go up by $10 or $20. Yeah. So in order to reduce the cost, what we actually do is we set a price where we actually want to target the price to be say up to 21st of January. Yeah. And this price we actually based on this what is the expected move, and it's 417, right? So basically I can actually put it at 80 cents. So for this trade, what I will actually get, I actually need to pay 205, 205, right? And of course, 205, I pay for this spread. The max profit which I will get, say I keep this up to expiry, is 295. Assuming Yum China goes to $55, I would actually get $295 of max profit. Okay, so this is how it looks like, right? Okay, this is actually the P&L analysis lah. Yeah, so if the price goes above 55, your profit will be capped at $295 cap because of the call you sold at 55. Yeah, that will actually cap your profit. Yeah, and this is based on the expected move, right? And of course, as time pass lah, yeah, your profit can actually go higher based on this yellow line here, yellow line here. But of course, on maturity, you will actually go on this straight line here, cap at 295. But before maturity, you actually profit will actually go along this orange line lah. Yeah, you can actually see the P&L THEO, right? Yeah, the figure actually move as you go up. Yeah, if the price shoot up very fast, then of course the profit will be closer to the max profit faster lah. Yeah, but you won't reach the max profit until expiry. Okay, of course on the loss side, you will actually cap your losses also to the amount which you actually paid for this option. But of course, I mean, if the trade goes against us, we will not keep this until you get a max loss of $205. Like yeah, until a certain point, you would probably how to say stop loss, or cut the trade based on what kind of stop loss value which you are actually comfortable at. Yeah. So this is actually the bull call spread lah, what we call a bull call spread or a vertical spread. Yeah. So I mean for 205, you get about 295. So the risk to return is 1 to 1.5. Yeah. So always target around this kind of risk to return, 1 to 1.5. Yeah. At least I mean, if you get lower, then it won't be good. It won't be a good trade for you to actually enter lah. If you get anything below 1 to 1.5, yeah, risk 1 to 1.5. Okay, so this is Young China, and the same thing for this other one, Twitter, right? Yep. So again, Twitter have weekly expiry, yeah, but the monthly one would be actually a better, more liquid one. And of course, the same kind of trades you actually do. But price is 44. Then you can actually buy a call at 45. And then, of course, you look at the expected move, which is actually $5, right? So you can actually do at $50 your call. You sell your call at $50 to cap your profits there. And of course, this you pay 170, and then the max profit which you have is 330 max profit only till expiry. But again, for most of these kind of trades, I would not actually keep it all the way up to expiry. Yeah, and if the price move up very fast, and of course, if the market is very bullish, right, these kind of stocks tend to actually move up very fast also, because it comes down very fast, man. When it goes up, also it can actually goes up very fast. Yeah, and if you look at the again the what is that the risk profile, right, is actually similar to the earlier one. Similar risk profile. Yeah. So upside profit is capped. What happened to this? Upside profit is capped. Downside is also capped, but of course, if it goes against you, you would probably cut your position if it is actually against you. Yeah, and you would not lose a lot. I mean, if the price say actually goes down to about here, how much? 40.5, right? Let me see this. Okay, it goes up to 40.5. It's probably about maybe about 100 or something. Yeah, $100, half of it. But of course, even be half of it, $100, the upside is, if it's quick, quite fast is okay. Yeah. And then what else? Okay, the other one, if you are actually very confident of this stock, and if your buying power is high, that means if if you have a bigger account size, right? And for those people who are also familiar with selling puts, yeah, you can also do for this trade, right? Which I also do quite a lot of this kind of trades lah, yeah, where I have a debit spread, which is actually a bullish directional trade, and on top of that, right, I actually want to finance this 170, and how do I finance this 170, right? Cheap it, I mean, I want the cheapest possible lah. Is what I do is I sell a put. Okay, I sell a put, and of course you sell a put at the price which you are comfortable on this Twitter lah. So for example, this I do at $1, right? Sorry, 38, right? Strike 38. Okay, so of course currently it's trading at 44, and strike 38 is actually way below here. Let me put here. Okay, so if you look at Twitter, right, I mean, this is the current price. Strike 38 is still way below here. Yeah. Okay. So if you're comfortable to actually how to say, if you don't mind owning Twitter lah at $38, right? Okay. If the price goes below, you need to actually take assignment of this stock, right? Then you can actually also finance this, yeah, for the trade. That means you collect $1. You collect $1. Just now you was paying 170, right? So here you collect $1. So the trade which you actually pay is only 68 cents. If Twitter actually goes up after you actually enter the trade, right? Then of course it is actually a double bullish. You get to gain from this put which you sold, and at the same time this call spread, you also get to actually gain, and your max profit is now about 432. Earlier was about 330, right? So you just add 100 lah, so it actually go up to 432. Yeah, but the thing is that your buying power has now been increased from 170 to 549. Yeah, and of course if you are doing cash this so-called naked put lah, I mean, I would advise you to actually cash secure it lah. Basically your account needs to actually have about 3,008 or $3,900 lah. Yeah, make sure you have that lah. Yeah, just in case you need to pick up this stock if it goes down below, right? Then you would need to actually pay this to buy over Twitter. Yeah, but of course when it really goes down, then there is also adjustments which you can do, which I won't cover in this session. Yeah, so for those who have actually seen my previous trader stock, right, where I actually cover this kind of trades, super bull, right, you can actually refer to the previous trader stock. Yeah, so this is actually Twitter, and the other stocks which I mentioned, right, is like say XLF, right? Okay, so XLF is actually the ETF for the banking ETF, and of course when COVID is so-called not a risk going forward, if it is or Omicron is not a risk, the thing on the financial sector, right, I would say all those news on tapering, on interest rate hikes and all would probably be what is that priced into the current stock. Yeah, and of course because of the sell down because of the Omicron, right, uh, uh, in all these stocks, right, of course now with that negative factor taken out, then I would say these kind of stocks would how to say, would have a bit of upside going back to the earlier price lah, because the earlier price all here, right, was all priced in with all the other tapering, interest rate hike and all these kind of things. And rate hike is good for banking. Yeah, banking rate hike is actually good for banking. So I would say XLF is also okay lah. I mean, you can see that it has actually gone down to this 100 EMA already. Yeah, 100 EMA, 100 EMA, drop here, go down. Now it's actually here again. Yeah. So XLF, you can also do similar trades, but I would say XLF, the price movement is a bit slower, XLF. Yeah. So smaller profits, but would be a bit how to say, probability can be quite high lah. Yeah, but the profits can actually be the price movements lah, can actually be a bit slower. Yeah, so don't expect to actually go in to get a $5 movement, because the movement is only $2. Yeah, so $2 movement, price 861 now. Yeah, so $39, you can actually just do the 36, and let's look at the what is that? The max loss is 73. You pay 73 cents for this. The max profit is 127. Yeah. So that's why I said this is not going to be big, but of course, we would want to enter and exit quick for this type of stocks to get a small profit. $50, 30, 40, $50 is okay. Yeah. You just get a huge jump up and then you exit the trade. You don't hold long on this type of stocks. Yeah, I won't hold long lah. Yeah, so this is XLF. The other one which I want to do is Dow, right? So Dow is now trading at about $53, right? You can see that last week it has actually came down from about here $58 all the way down to about 53. Yeah, and what this Dow, if you look at the pattern, right? I mean, I trade quite a lot of cash secured puts on Dow. Yeah, it actually goes up. It trade in range lah. I mean, during this time lah. Even during this time, it also trade in range. Yeah, it also trade in range for a while until it finds one level of support, and of course, this level is actually broken lah. Yeah, this range is actually broken because mainly of the Omicron issue. So now it's actually trying to actually go up again. Yeah, for Dow. Yeah. So again, Dow same type. You can either do a spread, January spread. Earnings is on 27 January, so it's actually okay. You can actually do a spread 55, and this is actually about 416, right? You can actually do at, I won't do at 60. Maybe try $250. That means try this lah. So 96 for 154. It is okay for me, because the price jump for Dow, once it was down, right, it actually recovers with quite a big how to say value. That means yesterday it already went up by $1. Yeah, but of course this type of stock, when yesterday it went up, if today it went up, then you don't go in. You wait for retracement to come, and then when the retracement comes, then you actually can enter this trade. Yeah, don't chase on all those stocks, including those which I've actually covered, right? If it goes up a lot, then don't chase on it. Wait for a bit retracement lah, because right now, of course, when everybody thinks, how to say, when everybody thinks it's all green, right? Everybody will start to actually jump in, but very often, the next day, somebody will actually put up some very bad news. Whether it's real or fake, somebody will start to actually put in some bad news, just to actually disturb the market a bit. And that's where the retracement comes, and again the opportunity for us to actually go in, is it? So need to actually be patient, and don't scared that you will actually lose out in any of these trades. Yeah. So again, Dow, and the last one is actually on XLF, right? No, XLF I did already. Big Commerce. Big Commerce is actually an internet company. It's actually similar to Shopify lah. It's listed about a year plus ago lah. Okay, Big Commerce, right? If you look at the price, right? Okay, Big Commerce price actually tends to actually comes down and then do a recovery. You see, in the past, I think it was listed maybe end of last year or something. in November or something. It was listed here, then all year went up. Then here it came down to about 41, right? 41, right? Then it rallied all the way up to about 72. It come down again, it go up again, it come down here, it's actually about 52. And now it's actually again coming to this level of the probably the previous low, about 41 or 42. Yeah. So again, for me, of course, I mean, at the end, this is actually an internet stock, right? I mean, how to doing the shop, something like Shopify, like having a web store and all these kind of things. Yeah. So I mean, if I do this cash secured put, let's see if actually there's any opportunity. Big C, big C, big C, big C. January, yeah. So if you do a cash secured put at 35, right? It's actually at how much? 166. The the bid ask spread is really quite wide lah. Yeah. I think you can actually do at 180 also. Yeah. So remember to change it lah. Just go to the mid price lah. You can even put 190 lah. Yeah, and let the price comes to you. Let's say if you do it at 190 lah. So what kind of returns which we get from this, right? So 1.9 divided by 35, right? It's actually about 5.4% return for 45 days. Yeah, which is quite good lah. I mean, 5.4% return. Even if you actually buy this stock at 35, you would actually take it at the lowest price. Yeah, but of course, need to be comfortable at it. I mean, for me, I'm comfortable. For you, you need to actually do your own due diligence on this company, whether you are okay with this company holding company stock. Yeah, because if it goes below 35, you pick it up at $3,500 less whatever premium you collected. So to do this trade, your buying power needs to be about $1,200 just to do a naked put. Yeah, naked put. And of course, if you say you want to do a spread, it's also okay. You do a 45 and 50, 45, 50, you pay 69 cents with this naked put. If no naked put, it's actually about 110. But for big C, I would tend to do it on a longer, they don't have February, you see. Yeah, they don't have February options. Then March will actually be too long. If they have February, then of course I would prefer to actually do a bull call spread on big C with a longer duration. Yeah, because sometimes these stock price don't move that fast one. If you look here, it actually don't move that fast one sometimes. Yeah, it can hang on here for some time, and or you go up and it will come down. You see it can be a bit sensitive to the market direction. Yeah, yeah. And you see here also it gap up. I don't know if I think this was earnings. Yeah. So big C. So I've actually covered all, right? I mean, yeah. So all the cheap eats, all the cheap eats. Okay, so no good. Sharon, no good. Everybody no good. Who is good? Michael Burry, very good because he is a short, the short king. Yeah. And Andy wants to see improvement. Yeah, I think today improvement should be there. How to cut position? What do you mean, Andy? How to cut position? You mean on the bull call spread? You exit the position. Yeah. That means basically if the price turns against you, and if you actually put determine about if the price dropped by say 20%, then of course you just cut your position, exit, and move on to another trade. Yeah, so that's how you cut position. After sell put, how to exit? Okay, on you mean on naked put? Okay, on naked put, for me, I actually do it differently. Okay, because the how to say, when I enter into a naked put, right? Firstly, I have to have the mindset that I want to own the stock. That means, let's say just now, for example, I was actually talking about Big C selling a naked put at 35, right? Firstly is I enter it, I would say if the price drop to 35, I will pick up the stock. That is before I enter the trade, I have to have this mindset. You guys also have to have this mindset, because if you actually enter into a naked put and if it actually goes against you, and if you actually want to cut position, it will be very expensive. Because you say sell at 190, right? You collected 190, and if the price goes down, if the price goes down to say current price of Big C was 43, right? 43. So if the price actually goes down to say $40, okay, definitely you will lose money. You will lose say at 40. What's the price? How much you will lose? Okay, well, if the price goes down to now is $43, right? If the price goes down by $3 lah, you would probably lose about $150. You will probably lose $150. Okay, and you have not lost in the position yet, because for naked put, right, you will lose if it drops below 35 on expiry. If it is at 40, you won't lose, man. If you hold on to it and on expiry it is still sits at 40, you will still collect that $190. Yeah, you still collect that full premium. That means you win in the trade, as long as it don't go below 35. Yeah, you will how to say, you will win in the trade. Even if it goes below 35, when you enter the position with a mentality that you want to own the stock at 35, right, you also win, man. So for a cash secured put strategy, you actually enter it, whatever happens, you will win in the trade. Yeah, you won't lose in the trade, and we won't cut position. Okay, we won't cut position for we won't cut or won't exit lah. Okay, the only thing which we can actually do is that in event that it goes to 35 or it goes slightly below 35, and you do not want to own the stock, you do not want to own the stock, that means you do not want to be assigned lah. So before expiry, that means before expiry, what you do is you roll the trade. You roll the trade means that you renew the trade, you extend. That means just now we were doing in February, right? January, right? You extend the trade. That means you roll the trade lah. That means you close the existing one. You buy back the 35 put, and you sell another put at 35. You sell another put at 35. And most of the time, if it is actually close to the market price, is actually close to this 35 strike, right? Even if it's slightly below, you will be able to generate additional premium when you roll the trade. You will be able to generate premium. So just now you collected 190, assuming you roll it for another month, right? You might collect 190, or you might collect $1 or 150. So in total, you are holding on to the stocks. Maybe earlier your intention was only 1 month, the put. Then if it goes against you, it drops slightly below 35, you roll it, then you hold it for another month, but you get paid for it lah. So the intention is, of course, for this Big C to actually go up again above 35. Yeah, and of course when 35 is already at the all time low, your chances of it to go back above 35 is actually high for this particular stock. I mean, for other stocks, you have to actually evaluate the the price chart and the history patterns lah. So at the end, cash secured put, if you actually know how to actually trade it, in fact, our trainings, the trainings which we do, we mainly focus to start to train traders to do cash secured put first. Because once you actually know how to actually trade cash secured puts, right, then of course it will actually be very beneficial to you, because you know how to control on this credit trades, yeah, on these puts, naked puts, and you can actually use it to finance trades. You can actually change it to a spread and do a lot of option structures with it, and also a lot of management trade management, which you actually learn when you actually master this selling of puts. When you actually master this selling of puts, yeah. So what is that, Andy? You have means sell put go against me. I close it. I pay a premium. Yeah. If it goes against you, you need to buy it back at a higher price. That means just now you actually collected 190, right? If the price actually drops down to below the price of the below the market price you should bought when you traded it lah, the value will actually go up. The option value will actually go up. Like I said just now, maybe go up to $3 over. So if you want to close the trade, you need to pay $3 over. So the difference between 190 which you collected and the $3 over, right? For example, will be your loss. Yeah. Then I sell a put for long term. Okay. Selling long term puts is also a strategy, but for me, I don't do puts longer than 1 month. Normally, I would actually do longest for me is 1 to 2 months max. Yeah, because when you do a long term put, right? Okay, what will actually happen is that stock price will actually go up and go down. Okay, maybe you do a 6 months put. Okay, maybe you do a 6 months put. For example, maybe during the first month, it is actually price going up. Second month, the price can actually go down to your strike or below your strike. Yeah. And then third month, it can actually go up again or it can continue to go down. So it's a bit difficult to actually manage for longer term put. Is I would rather sell on the monthly basis, because monthly basis, I can actually see and actually gauge the stock price movements. And again, if you do it on a monthly basis, right, that means a shorter period, the premium we should collect is actually more. So for example, on this say big C, you actually want to do a 6 months, right? Instead of doing a 6 months, you have the intention to do 6 months, but you cut it into monthly. After the first one expire, you can actually enter into another one. And after the second one expire, you can actually enter into another one. So that will actually be better, because if the price action of the stock is no longer valid for you to enter the second trade, right, the renewal, right, then you don't do it anymore. You move on to another stock. Yeah. So that's what I actually do on cash secured put. I don't do a long-term cash secured put. Yeah. Some people do it because they don't want to manage it. For example, they just sell a put on Microsoft, for example. Yeah, long-term one, because they say eventually, I mean, at the end of the day, because Microsoft price goes up. Yeah, so they just don't want to manage. They just say I sell a put here, and long-term it will go up. They are said if they're happy, they can actually do that. Yeah, but for me, because I trade regularly, right, then I don't need to actually do that type of transactions. Yeah. So okay, so any other questions you can actually also post here, and of course, if I cannot answer you today, then you just post it on below this thread on the comment box. After this show is also fine. Then if I look at it, then I can actually answer it in the comments. Answer it in the comments. Yeah. Of course, you can also post the any questions which you have on our Facebook page. Then I would also answer any of those questions there. Is okay. It's fine. Yeah. All right. So I hope you guys had a good session today on how to actually do under $100 cheap eats. Yeah, by doing bull call spreads. And of course, if you are a cheapo like me, then you can actually finance it by selling another naked put. Yeah, but only do it if you actually understand what your risks are by selling naked puts. Yeah. So that's all from me today, and I will catch you guys next week. And I hope to actually give you more contents. And until then, don't forget to train, trade, and thrive. Yeah. So all the best for today and the week ahead. And we hope to see all the way green until year end. Yeah, for our Santa Claus rally. Yeah. All right. Thank you. Bye bye.